Selamat datang ke Bank Negara Malaysia. Pada sidang akhbar ini, pertumbuhan ekonomi negara serta perkembangan monetary dan sistem kewangan pada suku pertama tahun 2013 akan diumumkan. Meskipun ekonomi global lebih mencabar pada suku pertama, ekonomi Malaysia terus berkembang. Ekonomi negara disokong oleh permintaan dalam negeri yang kukuh, terutamanya aktiviti penggunaan dan pelaburan swasta. Akan tetapi, ekonomi negara telah menerima kesan daripada keadaan permintaan luar yang lebih lemah. Oleh yang demikian, pada suku pertama tahun 2013, ekonomi Malaysia meningkat sebanyak 4.1%. Bagi tempoh berikutnya, pertumbuhan ekonomi Malaysia dijangka akan bertambah baik dan kekal berada dalam anggaran pertumbuhan 5 hingga 6% bagi tahun 2013. Namun, prestasi ekonomi negara akan terus dipengaruhi oleh keadaan permintaan luar negara pada masa hadapan. All right, let me continue now in English. In the first quarter of 2013, the global economy expanded by a more modest pace, and the growth of the US economy remained slow, while most countries in Europe continued to experience weaker growth. In Asia, economic activity also expanded at a slower pace, and while trade activity in most regional economies was affected by the weaker external environment, domestic demand has continued to support growth. Financial market conditions, however, generally improved during the quarter, although there were increases in volatility due to the uncertainties in the euro area. During the quarter, monetary authorities maintained their accommodative policy stance. Now, despite the stronger growth in domestic demand during the quarter that expanded by 8.2%, the overall economy grew by 4.1%, affected by the weaker external demand. In the first quarter, the Malaysian economy was significantly affected by the weakness in this external demand. Gross exports continued to contract during the quarter, while gross imports expanded at a faster pace, reflecting the strong domestic investment activity. So we have the contribution of net exports, which is an important contributor to growth, was significantly negative during the year, not only because exports contracted, but during the quarter, import demand was so strong because of our strong investment activity. Manufactured exports in particular experienced a considerable decline during the quarter due to the lower global demand for both E&E and non-E&E products. Commodity exports also contracted, although at a slower pace, as it was supported by continued regional demand for commodities amid lower prices. On the import side, import of capital goods continued to expand in line with the strong domestic investment activity. Import growth was also driven by higher imports of petroleum products for re-exports. During the quarter, domestic demand registered the strong growth of 8.2%, with private consumption remaining an important contributor to growth, expanding by 7.5% during the quarter, and the expansion of gross fixed capital formation also continued to be firm, supported by sustained capital spending both by the private and public sector. Gross fixed capital formation increased by 13.2%, and this is still a strong double-digit growth of investment activity during the quarter. Private consumption was also supported by sustained income growth and favorable labor market conditions in the first quarter. Retrenchment and temporary layoffs also declined by almost half compared to the previous quarter. Meanwhile, overall employment strengthened in January and February during this year. In fact, there was a net job gain of 342,800 persons in the January-February months, and this indicates that our domestic economy still remains strong. The expansion of gross fixed capital formation registered, as I mentioned, 13.2% growth, underpinned by continued capital spending by both the private and public sectors. Private investment increased by 10.9%, led by capital spending in domestic-oriented manufacturing and consumer-related services subsectors, in addition to the ongoing implementation of infrastructure projects and projects in the oil and gas sector. And we expect this trend to continue because many of these investments are huge with long gestation periods that will continue into the next few years. On the supply side, the services sector registered a growth of 5.9%, despite the weakness in the trade-related activities, and the growth was largely driven by domestic-related activities, in particular the retail and consumer segments that were supported by strong household spending. Growth in the transport and storage, however, slowed, of course, because of the slower external trade activity. Growth in the manufacturing sector slowed to 0.3%, as the export-oriented industries experienced a contraction of 0.6% amid the weakness in the global demand for E&E products and more moderate regional demand for refined petroleum products, chemicals, and chemical products. The domestic-oriented industries, however, continued to expand, supported by continued economic activity in both the consumer and construction-related clusters. For the primary sector, agriculture grew by 6% due to higher crude palm oil production. The mining sector, however, declined by 1.9% due to lower output of crude oil. The construction sector continued to register strong growth, expanding by 14.7% during the quarter, led mainly by progress in the civil engineering subsector. This reflected also the implementation of infrastructure and oil and gas projects that include the construction of the MRT, the Tanjung Bin and the Jana Manjung power plants, and the Bangan gas field. This is projects that have long gestation periods and will continue to contribute growth in 2013 and 2014. In the property sector, the residential subsector also expanded during the quarter. Turning to inflation, as measured by the annual change in the consumer price index, price increased by 1.5% in the first quarter, and this remains a very low rate of inflation. The increased inflation was driven mainly by cost-related factors, and while inflation is expected to rise during the year, it's expected to remain modest and within the range that we previously projected. That is, it will remain within the 2 to 3% range. Therefore, during the first quarter of 2013, the OPR was left unchanged at 3%, and the prevailing level of the OPR remains appropriate given the outlook for inflation and growth. Monetary policy will therefore continue to focus on assessing the potential risks to inflation and growth. Turning now to the exchange rate, the ringgit performance against currencies of our major trade partners was mixed during the quarter. The ringgit depreciated against the US dollar in the first quarter, following concerns over the timing of the withdrawal of the quantitative easing measures in the United States and other developments in Europe, which dampened the demand for emerging market assets. And the ringgit was affected also by domestic uncertainties during this period in the run-up to the general elections. The ringgit, however, has now appreciated against other major currencies. Against regional currencies, the ringgit performance was generally mixed, and for the year as a whole, the ringgit appreciated against most major and regional currencies. If we look at the private sector, financing activity for the private sector financing through the banking system and the private debt securities market remains supportive of economic activity. As at end March 2013, net financing rose by an annual rate of 11%, while loans outstanding grew by 10.6%. And this is a moderation in the growth of lending and financing activity, and this is a positive move. That is, it still remains strong to support the domestic economic activity, but at the same time it has moderated from the strong levels earlier that may trend towards being excessive. Loan disbursement moderated slightly from the higher levels in 2012, and loans disbursed to SMEs, however, were sustained. And this is very important because it's the SMEs that's going to drive our growth, an important driver of growth, and it is important that they continue to have access to financing. Gross funds raised from the private sector in the capital market through PDS issuance and IPOs during the quarter also remain strong, with 23.6 billion being raised during the quarter. Lending rates during this period have remained below pre-crisis levels. Average lending rates were at 5.5% at end March and remained 104 basis points lower than the level prior to the crisis. Retail deposit rates remained stable during the quarter. The average quoted fixed deposit rates of commercial banks were relatively unchanged. On financial system stability in the domestic financial financial system, this continues to remain preserved. Financial intermediation remained efficient, supported by institutional soundness. Our financial institutions are well capitalized and fully able to meet the more stringent capital requirements under Basel III. Common Equity Tier 1 ratio and Tier 1 capital ratio and the capital ratio for the banking system stood at 12.2%, 13.1% and 14.5% respectively at the end of the first quarter. The domestic financial markets remain orderly despite persistent uncertainties in the international financial markets, arising mainly from developments in Europe and the United States. Portfolio funds continued to be well intermediated in the more developed and matured financial markets. And most of all, public confidence in the domestic financial system remained intact. Since 2010, the bank has introduced a series of prudential and market conduct measures as well as education programs to preserve the soundness of the household sector. In the first quarter of this year, household borrowing continued to expand, driven largely by bank lending for the purchase of residential and personal financing by non-banks, while lending by the banking institutions continued to be well supported by sustained underwriting practices and sound risk management practices. Bank Negara Malaysia remains vigilant, especially through our supervisory oversight for signs of the emergence of increased risk to the banking system. Based on the latest available data, the National Property Information Center, house prices continued to trend upwards, increasing by 11.9%, driven primarily by domestic purchases, with foreign purchases remaining low at below 2% of total number of property transactions. This trend is within the bank's expectations, given the macroeconomic and demographic factors that are likely to result in house prices to remain elevated in the short term. So amid the continued challenges in the external environment, growth will continue to be driven by strong domestic demand. And growth in the domestic demand is expected to be supported by sustained private sector consumption and investment activities. Sustained income growth and stable labor market conditions will support consumption activity, and investment will be led by capital spending in the domestic-oriented sectors and the steady implementation of infrastructure projects, in addition to that in the oil and gas industry and civil engineering subsector. While international developments will continue to present downside risks, intra-regional trade activity is expected to reinforce our growth performance. That's all. And now we are